Because the management of Marico is waiting by Mr. Saugata Gupta, the MD and CEO of the company. Hi Saugata, good to be speaking with you. Well, the commentary around the rural recovery is something which is gaining ground. What's been your reading with respect to how things are on the ground right now, especially on the rural front?
If I look at last year, it was a combination of two factors. Obviously, rural demand was stressed. The premium part of the portfolio continued to grow. Having said that, I think we also saw a little bit of moderation in urban growth towards the second half of the year. What we now see is, I think we saw some uptick in rural growth, slight uptick in rural growth towards the end of the quarter. The second thing which also happened is, at least in our portfolio, there was a lot of deflation in pricing that happened, a combination of price drops we took on Parachute and Saffola, as well as significant shrinkflation that happened in the value-added hair oils portfolio. Now, this year, we have already started the quarter with a 6% increase in Parachute because of slight input cost increase in copra. The second thing that has happened is obviously the anniversarization of the shrinkflation, and the Saffola price drop will happen sometime towards the quarter 1 end. So therefore, you would not see any pricing negative effect. In fact, there would be some inflation and an improvement in mix. If you take into account all that, we see a visibility of double-digit revenue growth.
Visibility of double-digit revenue growth, and no wonder your stock is flying in trade in a otherwise weak market. But let's move on. With only 75% of the portfolio actually gaining market share, versus 85 sequentially in the previous quarter. Which segments or brands have been on the softer side?
As we indicated that more than around 75% of the portfolio have gained market share. The only place we have lost market share is in the bottom of pyramid segment in value-added hair oils, where there has been significant competitive intensity. Otherwise, most of the categories we have gained market share. What is also heartening is that we continue to, in our core brands and always, as well as food, Parachute and all, and also the premium part of value-added hair oils, we have continued to gain market share. 100% of our portfolio also gained penetration or sustained or gained penetration during the quarter.
Okay, so while the penetration has improved, your market share has been lost in a few of these segments. But given the volume uptick that you're talking about and the fact that pricing is going to be inflationary and not deflationary, what's the guidance on the margin front for FY25 then?
So I think obviously even last year, while we had volume pressure, we continued to invest behind A&P. I think A&P is at around 10%. We would like to keep it at that level. Secondly, I think as far as margin is concerned, we have had significant margin expansion last year. We definitely want to ensure that we grow margins in tandem with revenue. I don't think the absolute margin, the percentage margin will not, because we have been already peaked this year. So as long as the margin grows double digit in line with the revenue, we should be, I think, happy.
Saugata, coming back to the question on market share, what exactly is the strategy to defend the at the bottom level your market share? Do you have any plans how to go about it and take it back?
As you know, we have a far bigger presence in the bottom of pyramid in value-added hair oils compared to the premium part where our market share is low. I think our endeavor is to defend at the bottom of pyramid but win at the premium end. Obviously, there is significant competitive intensity. We are hoping that the competitive intensity will decrease. The second thing that has happened in the last 2 years because of inflation is that there has been some kind of a downgradation that happened. But we are now noticing for the last 6 months, the premium or the mass premium segments of the value-added hair oil is now recovering.
Okay, so the target is to increase the premium end of market share while defending the lower end. But what about the food and premium personal care category? Because that's now almost 20% of your revenue. Going forward, what kind of growth do you envisage? What could it become as the overall pie in the revenue share?
This part of the business we are extremely focused on. We believe that this part of the business should grow 20% every year if you have to deliver a double-digit revenue growth, and also the fact that we reduce our dependence on the commodity part of the portfolio where, as you know, the core, there's a significant dependence on commodity which is volatile. And that gives you stability as far as margins is concerned and also growth. Now, If you look at foods, we have grown 4x since FY21. We have also grown significantly digital business. But I think this year, the most important thing about foods is that we did a reset and we have a 800 bips margin improvement, which we have done in foods. And therefore, we are well poised to now grow the category at 20% plus. I think digital, again, we have now got critical mass. And we expect the digital business also to get into at least a double-digit EBITDA by FY27 with a 2x times growth. And we believe that this business will contribute to, which is now 20%, over the next 3 years will be 25% of our overall portfolio in India.
Saugata, let's talk about your recovery in the international business, Bangladesh in particular, Middle East. How exactly things faring there?
I think Bangladesh has staged a smart recovery, although there are, there is inflation, there is stress in the economy, but I think overall situation is far better. We are extremely strong in Bangladesh. We have also got significant growth in Middle East and Africa. Last quarter, because of the HPC category being a little subdued, we didn't get much growth in Vietnam. Having said that, I think we are reasonably on course to deliver double-digit constant currency growth in the international business.
Okay, so double-digit growth in the domestic business, double-digit in constant currency international as well. That's fairly optimistic there, Saugata. But before I let you go, last question on the Beardo and the Plix portfolio as well. Where do you see it scaling up? Any internal targets?
Well, I can tell you that based on, most of the startup brands are in red. Beardo is actually one of the more profitable version. It's already turned positive at this current scale of Beardo. I think both Beardo and Plix currently and Just Herbs has also crossed 100 CR ARR as we exited this year. All these three are poised to scale up well. And as I said that we are also looking at not only scaling up, but a scale up which is sustainable and profitable, because at the end of the day, if digital business continues to contribute to significant part of overall portfolio, over the long term, it has to start delivering double-digit EBITDA.
Okay, the commentary clearly liked by the street. That stock is high by 10% and it's taking along rest of the FMCG pack as well. Saugata, thanks so much for joining us today. But let's do one thing. Let's take a short breather.